But we begin with our expert panel and 3 things investors ought to be thinking about right now. On the Barron's Roundtable, my colleagues Jack Hough, Megan Leonhardt, and Al Root. So, Jack, the Dow and the S&P just keep on marching higher. On Thursday, they hit new highs, and on Friday, they said, we're going to beat that.
Record highs, 5th straight week of gains for S&P and the NASDAQ. There's a lot of reasons for stocks to fall right now. There's high valuations, there's war, there's natural disasters, there's election angst, but they're eclipsed right now by a decent outlook for earnings season. We're in a rate-cutting cycle, and inflation is fairly benign. The flip side of moderating inflation is that you get a smaller raise for your Social Security payments. We learned this past week what it will be for next year. 2.5%. Hold your applause, please. That's the lowest raise in 4 years.
But it's low because we're seeing inflation start to do that nice cooling trajectory that we wanted. This was a little bumpier this month, but, I don't think it's going to affect the Fed calculus too much. It's really focused on jobs. Unfortunately, because of those natural disasters, because of Boeing strikes and things like that, we're going to get a pretty cloudy picture over the next couple months. It's going to be a challenge.
And the bond market has a cloudy picture. The 10-year bond is now over 4% in yield. Jack, should we be worried about that?
I say no big whoop. It's been lower this year, but it's also been higher this year. It's still low by historical standards. The main thing it tells me is that the bond market does not believe this game of tax break tag that we're hearing on the campaign trail right now. There's no tax on tips. There's tax breaks for home buyers, for car buyers, for left-handed pickleballers. There's no money for any of it right now. And so, a 4.1% 10-year yield, it says the market's writing that off as some of it, at least, is campaign fluff.
All righty. Let's go back to stocks, Jack. Who were the big movers? What caught your eye this week?
So I don't look at the percentage companies beat estimates by, because that's just how much Wall Street was wrong. I look at the stock movement. And going by the stock movement, the biggest upside surprisers on earnings were J.P. Morgan, Wells Fargo, and Fastenal. Obviously, good signs for the banking and manufacturing industries. Next week, we're going to hear from more big banks, plus Netflix and Johnson & Johnson. Outside of earnings, cruise line stocks shot higher this week on some Wall Street upgrades. And Uber was a top gainer. I guess that's robo-taxi euphoria.
Well, probably dysphoria, because the robo-taxi event Tesla held on Thursday night, I would characterize it as a very big disappointment. Yes, there was a physical robo-taxi, but nowhere near the required detail on market, safety, how they're going to deal with regulators. Tesla stock was down almost 9% Friday.
The car looked cool, but I wouldn't get in it. Yeah, not if it's moving, at least. So, Al, let's have some history here. In 1911, the government broke up Standard Oil. In the 80s, broke up AT&T, which I looked it up, had an 85% market share. So I asked Google, hey, what is Google's market share of U.S. search? 88%. And the Justice Department has noticed.
Yeah, so we had a suggestion of remedies to the judge. The Justice Department is suing for the monopoly in search. I thought you were going to make me guess. I was going to guess 90% share, but it's 88. And so now we have months before the judge will decide, and then probably many months after that. But what we're looking at is an AT&T-like Alphabet could be broken up. Google could be removed from Alphabet. The one thing that this has really forced investors to do is say, like, well, what's Alphabet worth? Broken up into pieces. The good news, or the silver lining, is in all likelihood it's worth more. Alphabet's worth about $2 trillion today. And then if you look at its cloud business, you compare it to Microsoft or Amazon. If you look at its YouTube business, compare that to like Instagram, Meta. And then if you try to figure out what search is worth, maybe just value it like a market-based company, you're looking at a $2.6 trillion valuation, easily up 20-30% to $210 stock. So that's the silver lining.
Yeah, if you run the empire, you don't like to see it broken up. But if you're an investor, it could be great news. YouTube has more streaming hours than Netflix. It's a pretty big company. So there are thoughts that Meta and Amazon could be next in the crosshairs.
Yeah, I remember Pringles, you can't just eat one. Amazon.
Come on, that's Lay's. You're going to have some very upset people. That's Lay's, right? Lay's, you can't eat just one?
I think it's Pringles.
Oh, it is?
Is it? Oh, maybe. No. Well, it was your column.
This is scandalous.
But you look at the next tech giants, Amazon and Meta and Apple in particular, on what the Justice Department could be looking at next.
All righty. Let's move to a sad story. Hurricanes, a 1-2 wallop for Florida. North Carolina, of course, is hurting badly. We're a business show, so tell us the business angle here, Megan.
The business angle is it could have been much worse. I think, it was a devastating week for Florida and, of course, Helene 2 weeks before that. But it is one of those situations where we're going to start to see this come out in Q4 earnings. So travel companies, the theme parks, the airports, the airlines, they took it on the chin this week. And unfortunately, we're going to see that show up. Actually, the last time Disney closed for Ian was a 2-day closure. It set them back by about $65 million. So no Trump change here. Interestingly, on the flip side, we did actually see that insurers got a little bit of breathing room with all of this. Because Tampa didn't get that direct hit, the stocks actually did kind of rebound this, on Friday after everything kind of calmed a bit. So it is sort of an interesting buy play. And of course, housing is another big factor of this. I mean, when you start to see these big storms, the anxiety level starts to rise. You do have a lot of people, especially in the aftermath, that saying, no thanks, we don't want to move back. This can, of course, play on home sales. Now, I will point out that we've been in a little bit of a national housing slump as it is, and that, of course, is due to mortgage rates and supply issues that we've talked about a million times on this show and others. It is one of those things where it's going to be hard to really parse out exactly what we're seeing from storms, what we're seeing from some of these, other conditions.
Alrighty. The WSJ had a headline. I'm going to read it. The Great Florida Migration is Coming Undone. Understandable with all this. Alrighty. Thanks, guys.